Dear student, Assalamu alaikum. I hope by the grace of Almighty Allah, all of you are fine. Dear student, I am Muhammad Shahjahan, Assistant Professor, Department of Accounting, Milestone College, Uttara, Dhaka. Dear student, today we will discuss Chapter 4. This is our first lecture on Chapter 4. Dear student, in this chapter we will discuss capital and revenue transaction. Dear student, after this lecture, you will be able to discuss capital transaction, you will be able to discuss revenue transaction, you will be able to determine capital income, capital receipt, capital expenses, revenue income, revenue receipt, and revenue expenses. Dear student, moreover, you can able to find out deferred revenue, expenses, and owner's equity. Dear student, earlier we have discussed transaction. You know that transaction means give and take. That means if you give any benefit, instead of that, if you receive any benefit, then it will be transaction. Dear student, now classes of transaction. Transaction are two types, capital transaction and revenue transaction. And this capital transaction also are divided into two types, capital receipt or income and capital expenses. On the other hand, revenue transaction also two types, revenue receipt or income, revenue expenses. Dear student, that means mainly transaction are two types, and again these two types are divided into another two types. Let's come to next topics. Dear student, capital transaction, the transaction that give long-term benefit more than a year, not regular and generally big in size. Dear student, that means three main characteristics of this type of transaction. Number one, this type of transaction is will give us long-term benefit, will give us long-term benefit. That means more than a year. That means, dear student, we can give an example. If we purchase a pen, it will give a service for maybe 3 days, 5 days, 10 days, 1 month. But if you purchase a calculator, that may give a service more than a year, then it is capital transaction. Dear student, this type of transaction not regularly occurred in the business. A calculator businessman would not like to buy every day. Maybe once a year, after 5 years, he will buy another calculator. So this type of transaction is not regular, and the size of this type of transaction generally big. It may be small if it gives service long time, if it gives us benefit for long time, then this type of transaction will be capital transaction. For example, capital, loan taken, purchase of land, building, machineries, furniture, etc. This type of transaction will not occur in an organization regular interval. Okay, I hope you understand, dear student. These are the some example of capital transaction. Dear student, this capital transaction are two types. Number one, capital receipt. Number two, capital expenses. Capital receipt that gives long-term benefit. The capital receipt that gives us long-term benefit, and that means long-term means more than a year, and irregular in nature and generally big in size. That means the difference from capital transaction is that now only receipt. If you receive money and that will give benefit for a long time and generally big in size, then it is capital transaction, capital receipt. For example, capital loan, sale of fixed asset. Dear student, you know capital owner will not give capital every day or every month or every year also. Maybe once a time, or if it is required, he will give another time capital or two times capital. Whole life of a business. That's why this type of transaction is irregular transaction, dear student. And now capital expenses. Capital expense means the payment. Now earlier you receive, now the payment that gives long-term benefit. That means characteristics of these two transactions are same because it is from capital transaction. Here we receive, here we have to pay the money. The payment that gives long-term benefit more than a year, irregular in nature and generally big in size. Three main characteristics, and this type of transaction is capital expenses. For example, purchase of land, building, furniture, equipment, machinery. These are the example of capital expenses. Dear student, now capital income. Capital income seems to be synonyms of capital receipt, but the difference is identical. Dear student, that means capital income is look like synonymous to capital receipt, but actually there is a little difference between capital income and capital receipt, because capital income is a part of capital receipt. If I can give example, you can understand easily. Sale of furniture 15,000, after using it, books value is 12,000. That means earlier we have bought a furniture by taka 12,000, or after depreciation the value is 12,000. Now we have sold it 15,000. So 15,000 is my capital receipt. But out of this 15,000 minus 12,000, 3,000, this is my income. That means if I sell any fixed asset, and in that time if there is any profit, then it is capital income. Dear student, now revenue transaction. Revenue transaction are two types. It is revenue income and revenue expense. The receipt that gives short-term benefit less than a year, just the opposite of capital income. The receipt that gives short-term benefit less than a year, regular in nature and generally small in size. That means this type of transaction will occur regularly. Like sales, every day a businessman would like to sell his goods. So these are the example of revenue income. Then revenue expenses. The payment that gives short-term benefit less than a year, irregular and generally small in size. That is the example of revenue expense, like purchase of goods, salary to the staff, rent, advertisement, etc. This type of transaction occur regularly in the business. Dear student, now revenue receipt. Revenue receipt gives short-term benefit less than a year, regularly and generally small in size. Interest received in which 1,000 for next year. That means you receive 5,000. This is revenue received, but out of this 5,000, 1,000 is for next year. So revenue income is 4,000. On the other hand, revenue payment, the payment that gives short-term benefit less than a year, irregular in nature and generally small in size, are revenue payment. Here also revenue income, revenue payment, paid salary to the worker, it is 15,000, in which 5,000 is for last year. Here 15,000 is revenue payment, but revenue expense is 10,000, because out of this 5,000 is for last year. Last year we may not pay for our shortage of cash money to the worker. This is revenue payment and revenue expenditure. Deferred revenue expenditure, expenditure of revenue nature, the benefit of which extend beyond the accounting period in which it is incurred. The unwritten portion of this type of expense which carry forward to subsequent year is called deferred revenue expenditure. That means it is the expenditure, but we will enjoy the benefit in future time also. That's why this is deferred revenue expenditure. For example, transfer cost of business. May our business is in Uttara, we would like to shift it in Mothizil for better service from the to the customers. That means how long we will stay in Mothizil, we will get benefit from this transfer cost, but this transfer cost is revenue expenditure, but benefit we will enjoy more than a year. That's why this is deferred revenue expenditure. Dear student, now assessment. Dear student, I hope you understand today's lecture. Now you will write some example of capital receipt, write some example of capital expenses, write some example of revenue income, and write some example of revenue expense. Then I hope I can understand you understand the lecture. If you would not like to, if you would not understand, then you can ask me question at any time. You can write, you can talk to me, you can discuss with me. Dear student, now homework. Dear student, an example is given here for some transaction. Look at capital invested in the business, machinery purchase, loan taken from bank, good purchase, employee salary, electricity and telephone bill, depreciation of machinery, received from investment, rent paid, commission received, goods sold, wood done by owner.